Welcome to the SDG 7 Global South Pavilion. Many thanks to SE4All for hosting this session and bringing decentralized renewable energy prominently onto the agenda at COP28. So we're here in this session to talk about de-risking distributed renewable energy and scaling up investment. So distributed renewable energy is the fastest way to bring electricity to a large proportion of the 700 million people who live without access today. So we're talking about households, farmers, enterprises, health clinics and schools. And DRE is the fastest and the cheapest way to bring electricity to them. And many of these people are also, of course, the most climate vulnerable and living in the least developed countries. So I think in the last 10 years, the DRE sector has had in the region of $5 billion of investment in the last 10 years. Give or take a few billion, depends on what you count and whose figures you believe in, but around that region. And if you look at the COP goals, they talk about tripling renewable energy investment. I think the DRE space needs to do like 30 times. So we are well behind track for climate goals and development goals. And I think that a big part of that is about how we manage risk. At the moment there are investors, equity and debt that are very much interested in clean energy, in impact, in gender, in jobs, but they are not getting the returns that they need and that they expect. So they're naturally not putting in the capital. So I think we need to improve how we de-risk and dramatically scale up the funds that we do to mitigate these risks. So the panel today is going to look at what are some of the risks that DRE projects face, how are these being mitigated, and how can we scale this up to dramatically ramp up deployment of DRE for the world's poorest people. Cool. So that's the plan. And I would like to start by introducing our panelists. First, Martijn Veen from SNV to join me. Next up, Salia Dimene from Funai in Mozambique, please. Mr. Manoshina from Husk Power. And next, Jamie McInerney from Cross Boundary. Fantastic, and everybody should have a mic next to them. I'll go along and ask you just to quickly, please say a bit about your organization and what you're doing in the DRE space.
I'm Martijn Veen, Global Sector Head Energy for SNV. SNV works globally on agri-food, water and energy sector systems. And basically what we work on is market-based approaches to get energy access really to those places where it is lacking, just what you were introducing just now. That's on off-grid electrification, that's on clean cooking, and also on the nexus between energy and other sectors, like energy applications in agriculture, for example. We work in 25 countries globally, mostly sub-Saharan Africa, West Africa, East and Southern Africa, and Southeast Asia.
Fantastic. Salia, please tell us about Funai.
Hello, good morning, everyone. I would like to, first of all, to thank you for this invitation to Funai, to Mozambique, to be here to discuss any issues related with off-grid in Mozambique and or maybe in the world, taking in consideration the panelists. I would like to say that in Mozambique we have the National Electrification Strategy, which defines two approaches, the on-grid approach and the off-grid approach. So Funai is the institution who has the responsible or the role to cover off-grid. In that way, looking to the energy access in Mozambique, we are talking on 52% that this cover all the electrifications, means that on-grid and off-grid. And the contribution of off-grid is almost 6%. On that way, Funai has developing even the solar home systems and the mini-grid. Previous years, the government decides to open the market open the solar home systems and the mini grids. This is to allow private to come and give a big support on the activities to increase the energy access in Mozambique. So it's what I can tell about FUNAI. Thank you.
Thank you very much. Manoj.
Hi everyone, I'm Manoj Sinha, co-founder and CEO of Hustle Power Systems. We have built rural clean energy services platform over the last 15 years. I started this company in my home state, Bihar in India, 15 years ago, so I've been doing it for a long time. Now we are proud owner of the largest mini-grid fleet of assets, which is 200 plus, and growing at a rate of 15 new mini-grids per month. Thank you. In India and Nigeria, these are the two countries that we are present in. Speaking about, you talked about return on assets. We are profitable in both operating countries that we operate in. And we are very fortunate and we are very delighted that we have recently closed a $100 million round of funding, equity plus debt combined. Thanks. The goal is to reach, we have a fleet of 200 plus mini-grids. The goal is to reach 1,500 by 2026, 2027. Now that I have been at COP28, that ambition looks very small. So we are upping our game and we are going to go for 5,000 plus by 2030, which is also our UN Energy Compact promise that we have made. So $100 million therefore is not sufficient. We are actively going to be looking for $500 million to meet our long-term ambitions. We are very excited to be in India and Nigeria. We are looking to enter other countries that may include DRC and other sub-Saharan Africa as our expansion opportunities. Thank you.
Jamie.
Thank you, and thank you for hosting the panel. My name is Jamie McInerney. I'm with Cross Boundary. Cross Boundary is an investment firm focused on sustainable economic development in frontier and underserved markets globally. We're a mission-driven firm to bring access to capital to help grow opportunities in these markets. And there's two main strategies that we deploy to do this. The first is through our direct investment platforms, and two are relevant to this conversation: Cross Boundary Energy, which is distributed CNI solar plus battery systems, and the other is Cross Boundary Energy Access, which is a developer of mini grids. The other side of the business, the advisory side, we advise on energy transactions across the full spectrum of distributed energy technologies and geographies across Latin America and the Caribbean, Haiti, and other difficult places. Thank you.
Fantastic. As you can see, we have a fantastic panel to take you through the next 40 minutes. Let me share a good, bad, and a challenge. So, good thing, we're talking about risk management, but we don't have any risk managers here, so we're not getting into that level of detail. The bad thing, we haven't done fantastic in terms of our gender diversity, so Isalia, you will be here representing and get plenty of mic time. And thirdly, we're competing with the Nigerians. So it's up to each of you to speak up loud and proud. Cool. All right, firstly, I think about risk management, de-risking. It can get esoteric. So let's start with the real things. Let's talk about climate risk. And Isalia, I'd like to ask you to share some of the extreme weather events and the hazards that are hurting the DRE projects and the citizens of Mozambique.
Thank you. I can start saying that Mozambique is an region that is very vulnerable for the extreme events due to the climate change. Due to that reasons, Mozambique has suffered cyclones and floodings. It means that looking to the population, how the population are distributed in the country, we have a big challenge on that. Because as I mentioned, FUNAI works on the off-grid. It means that very, very areas that are far from the grid, from the main cities. Due to that fact, when these accidents comes, they bring a lot of impacts, negative impacts in the communities. looking to the electrifications on the two ways that I've already mentioned. On the solar home systems. The solar home systems are provided by the private. It means that there are different schemes to provide and support the communities. How do they afford to these systems? So there are mechanisms such as pay-as-you-go. It means that people buy these systems and they need to pay on the different models to the private. It means that when these impacts from the climate change comes, it means that the people lose their belongings, they lose their lives. It means that the way that do they have to pay these systems are loose. So we are talking on the people that have low incomes. When the floods are coming, it means that the people lose everything. It means that the systems that they should pay, the resources that they should have to pay, they already lose. So it's the big impact on the communities, even on the solar home systems. And this losses is not only for the communities, it's also for the private, because it's a private investment that they did. So the climate change brings these very negative impacts in our populations. And we are talking on a lot of people, because many of our populations are in the rural areas. It means that people that do not have very financial and high conditions to pay. In other hand, we have mini-grids. It's a government investment. As I said, the market is open, but up to now, we do not have a quite experience with private to develop mini-grids. All the mini-grids are already developed by the government. It means that a government resources. When these impacts come again to the mini-grids, it means that the investment that was made by the government is lost. And we are aware that these resources are coming for the partners, are coming for the donors. It means that it's needed to reinvest. Where do we fund the other funds, other resources to reinvest? Because partners come with resources just to increase the energy access. So it means that when we are talking on these extreme events, we are talking on the losses, on the financial losses, on the social losses, on the health losses, and on general losses that the people have. On that way, even in this COP, I think that you are aware on that, our president launched the energy transition strategy. And this strategy brings ways what is the government views on this transition, because we cannot forget that we are talking on the transition, but we need to remind that the energy access in Mozambique is very low. We cannot talk on the transition if we do not have anything to move, to transit on that. So it's a big challenge that we have also on the climate, but even on the situation that we have aligned with the energy access. So the main goal that we have as a government institution, is how can we find criteria and methodologies to increase the energy access in our country. Of course, aligned with the transition, because we are on the page of energy transition. Is what I can share with you. Thank you.
Yeah, thank you. So we hear that the climate emergency is here and now in Mozambique. Manoj, obviously India has been hit hard by extreme weather. Can you explain or share some of the experience that you have and how it's affected Husk as a company?
Right, so when we started the company in 2008, we would have a flooding event which is once in 10 years. In the last 3 to 4 years, and this is in our own lifetime, right? We have been seeing flooding every single year. So there's 2 feet plus of water that gets accumulated in the whole community every single year now. So of course, it has economic outcome, which means people cannot go to work, factories cannot open, and so on and so forth. We haven't quantified what is the impact on GDP reduction because of these floodings that are now happening once a year rather than once a decade. So what we have done as a solution to that is, at least from the energy perspective, so typically the grid will go out, right, for a day, for 2 days, for 3 days, and therefore the productivity goes down substantially. So in our design of mini grids, what we did was we figured that the water is going to be every year, so everything has to be elevated at least 4 feet and above, right? It adds cost to our system. Of course, it is more expensive than doing it the normal way, but it does allow us to operate our electricity for at least 18 hours a day, even when there's a 3 feet of flooding, without security or safety risk. So that's the intervention that we are bringing from design thinking perspective to mitigate, or not mitigate, to adapt with the climate change that has occurred. But it does have a repercussion in terms of higher capex, difficulty operating those things, and of course, how do we also enable our customers so that they can keep their businesses open? That part we haven't touched yet. So there is definitely a need for adaptation climate financing to solve this problem, because the normal capital is too expensive for these kind of climate events that none of us, I think, created for the region that we are serving. So we need to talk about climate adaptation financing. Loss and damage financing may be not that relevant for India market, but would be more relevant for Nigeria market. So that's how we bifurcate what we think is design thinking to adapt with the new climate events. Climate financing that we can secure from adaptation climate financing for making sure that our system is resilient. And thirdly, for loss and damage fund is very appropriate, at least for our case, in the Nigerian market. Thank you.
Okay, so there is some technical adaptations that can be made to make systems more resilient, but it comes at a cost. Yeah, and I hear that the consumer element, people's ability to pay and helping them to get through these shocks is not yet something that you've got your head around. So, Martin, I know in Mozambique through the Brillo program, SNV is doing results-based finances, and part of that is about improving affordability. Can you share a bit about how that may or may not help people through such shocks and difficulties?
Maybe just briefly highlight the broader scope of that program. It's a comprehensive market development program where we're working closely together with the government, the ministry, FUNAI is a rural energy agency, or the fund, but also with the regulator. So there's a lot of de-risking taking place on the regulatory side. We'll come back on that. But also indeed on other mechanisms to de-risk private sector to actually invest and scale up their operations within the country. And in the framework of that program, I just happened to visit the country actually after the cyclones, and particularly also in that part where the cyclone hit very hard, so in the center north of the country. And we were there with the company, just as a story also for the audience. This is real life stuff, We're coming there, and we are supposed to have a nice visit with one of the solar home system companies that we're working with. We're going out there into the village, it's raining. We're joining a group of sales agents, and they're going into the village selling solar home systems. That's what they're supposed to do in the rain. You're talking about villages where half of the roofs were no longer there. You're talking about houses where the agents were trying to sell a solar home system and actually achieving that and installing them on walls that did not have a roof. Yeah? So that was real life happening, and we were flabbergasted. Actually, we had a call with the management of that company, which was not in country, that same day. And we said, look, this is happening. Maybe there is ways we need to look at adjusting the business model. So it's not just financing, it's just really also working together with the companies that we're working with and assessing that situation. How should we adjust the business model? And that comes with, indeed, okay, maybe certain areas are not most appropriate now to come in with your flat approach of just sending in sales agents, but it should come with a revised strategy. So what did we agree upon? Indeed, for those particular areas, reduce the costs of the systems, because you have a big affordability issue. I mean, those people have other things on their minds than installing a solar home system. They actually do, because they think it's nice and beautiful and they would love to have it. But hey, let's first of all put a roof on that house, right? And let's give those communities also a chance then to invest by lowering the prices. And that's where, indeed, with the program that we're running, with the subsidy schemes that we have, we could agree on higher incentive levels for those particular parts of the country that then allowed the companies to continue operating there, to scale up in those areas, and for then the people in those difficult circumstances still have access to energy. So I think that's kind of how we need to adapt to situations like that, be creative, and that would be my response on that.
Yeah, thanks very much. Jamie, turning to cross-boundary and some of the mini-grids you've got, there is, of course, the project level risk, trying to predict what is the demand that you've got is a key driver of your revenues. Could you share a bit about how you manage that uncertainty and stimulate demand and help some of your customers to afford to pay?
Yeah, absolutely. I mean, maybe I'll just start by describing the cross-boundary energy access model a little bit. So it's a somewhat different from our other fund. It is a financier of mini grids. We work with local project developers and help them finance their grids, and then we buy those grids once they're developed, and we hold them in like an asset co. So the demand is, and one other stat I think important here, so 60% of the demand on the grid comes from like 5% of the customers, and if you go up to 10% of the demand, 90% of the demand on the grid, it's 10% of customers. So you're really focused on like the productive use, and so that demand is from day one you build the grid like focused on those core customers, of course, and the way that but again, we are working mostly with the developers in the back end. We're buying their grids from them, and holding them. So what we do is we structure in incentives to align with the developer, who then often is also the operator after we own it, to ensure that they are incentivized to continue to have adoption and increased use of electricity on the grid. So that fund, Cross-Boundary Energy Access, also, just to get to the theme of this panel, de-risks by raising concessional capital. And it's actually at a point right now where the fund has raised more concessional capital than we sort of need to the equity. So we're at a point where we need to raise more equity for that fund to match the concessional capital. And of course, that equity at this point, because of those significant contributions to concessional capital, is actually quite de-risked. So that fund is at the phase right now of raising $30 million US for its next stage of growth.
Yeah, fantastic. So you've raised concessional capital, now looking to get equity. Can you say about your finance and investment journey and kind of how the different types of concessional capital kind of come in and change as you grow?
Yeah, I think this is a really key question, because it is very, again, our two of our funds, Cross-Boundary Energy, which does C&I solar, is quite a bit more developed. It's a $200 million fund now, and that is doing project development and ownership of their assets. And I think that fund has ambitions to scale dramatically up to $1 billion or more. And I think one key, the difference between Cross-Boundary Energy and Cross-Boundary Energy Access gets to a key point. So early on in the creation of these business models, like Cross-Boundary Energy, its first fund was $13 million. That included first loss capital from USAID, about 10% of the capital, and the rest was highly concessional. So small fund, and it was essentially just trying to prove the business model. Like, did this work, right? And we raised that in 2015. We were able to return it with a 15% IRR in 2020 and prove that the business model worked. And from there, we've scaled it, dramatically, and we want to scale it more. Where I think it's important for the DFIs and other providers of concessional capital to be careful is early on in that fund, we needed And currently, we have money from DFIs. But we have to be careful. If we're going to truly get to scale in renewable energy generation, we need the pure private sector players to come in, like the Brookfield Renewables, right? And they're not really looking at emerging and frontier markets at this point. We have to be careful and ensure that the DFI money comes in and de-risks and invests in early stage business models. But then by the time they're transitioning and getting to scale, they're just providing first loss catalytic capital, but not driving down the price of a round where, so you're allowing the private players to come in and take a higher IRR, but they can come in at much higher scale. And that's ultimately what we're going to need to scale up, renewable power generation globally. So cross-boundary energy is getting to that stage where it's ready to make a large jump, and we really want to get the pure commercial players into that space, as Manoj was talking about. Cross-boundary energy access, the mini-grid fund, is more on the early stage of that growth trajectory. We do need DFI capital to prove the business model, prove that it works, and take lower concessionality positions in the capital stack. But I think as the mini-grid business model gets proven, and we think they should be essentially treated like infrastructure investments, long-term patient capital, then I think as we move up that scale, then the DFIs need to try to switch to just crowding in private commercial sources of capital and not taking in like the whole round and down pricing it a little bit.
So it's about DFIs leveraging instead of lending. Yeah, cool. Manoj, you said that Husk has just raised 100 million. Congratulations. Can you share a bit about the de-risking capital that's in that? And what do you need to get to the 500 million that you're targeting?
Let's talk about what risk factors exist in the ecosystem. Let's talk about what risk factors exist in the ecosystem, right? So the risk factors that we think are important to consider, the first and foremost is policy risk. Right? The reason why we are in India and Nigeria, the policy risk was taken off the table. So do we need to de-risk it? Not actively, but we need to work closely with governments to make sure that the policy evolves and doesn't go backwards, right? So that's the first de-risking we did with the help of government stakeholders and policymakers. Second is the demand risk, right? So once you have the policy and the playing field, what is the electricity demand that you can generate, reasonably speaking, over 2 to 3 years period, that you can have 80-90% chance of return on asset that exceeds, let's say, 12% in USD. That is an art. That's difficult to solve, and we have a programmatic way of getting. So the theory that we had, or hypothesis that we had in 2008 and 10, was you come in with power supply and things will happen. We got totally bitten, nothing happened, so we changed our business model and approach. The demand risk exists. Just because somebody has electricity is not going to start using it. So we have a programmatic approach of creating demand by promoting productive usage of power. So commonly used phrase, what does that really mean? You need to go to a village, figure out what the ecosystem is, what kind of agri-processing, what kind of carpenter shop, what kind of, you really need to know the pulse of that society to be able to programmatically do it at scale. Right, so that's what we did with the first 200 mini-grids that we built. And right now our, this is a little bit technical, but capacity utilization factor on 200 mini-grids is north of 65%. So we are selling about 70% of everything that we generate, right? That means we are going to generate return on asset that is more than 15%. So that's the de-risking that we did. So we didn't, so that was second factor of de-risking. Third is cost of capital for financing that will give you a leverage for equity returns to go higher, right? That's how the commercial capital, the pure play commercial parties will come. We do have Shell Ventures as one of our investors. We have STOA, that is another infrastructure player as an investor. They are looking for 18+% returns, right? So the way to do that, in our opinion, is to go with a lower cost of debt capital. And that's what we brought with a whole lot of DFIs. Right? We have an interest rate of 5% in USD. In this market, when the SOFR, if you guys are familiar with the term, is trading at more than 6%. So we are actually below market. That's how you boost the equity return. So that's the third. Cost of financing will mean how much return you are going to generate from your assets, right? The fourth that very few people talk about is you need really, really talented people to execute your plan, right? That's a very big risk. Just because you threw money and the policy works doesn't mean your asset is going to work or your customer service will be excellent. Finding talent in this sector is very hard. And if you want to get the best of the best, there is a need to pay them like they are the best of the best. This sector is very shy of paying, let's say, $300,000 or $400,000 of salaries to the C-level suite. If you don't have that attitude, you're not going to make it. So those are the 4 risk factors that we have been solving for the last decade or so. And that's why we were able to raise commercial capital on the equity side. There's a mix of DFI. And on the debt side, it is right now purely DFIs with fairly low cost of capital that is giving us this longer room. To your last question about how do we go and approach $500 million, now we have 200 assets showing 70% capacity utilization. That means 15% practically guaranteed return. I can go and talk to TPG Rise. I can go and talk to BlackRocks. I'm talking to John Kerry tomorrow morning. So that's how we are going to plan and raise the next $500 million in order to meet our UN Compact goal that we have.
Thanks very much. Yeah, let us know how you get on with John Kerry. Good luck with that. Martijn, SNV works with a lot of kind of smaller African-owned companies through such as the Brillo program. Can you share a bit about the kind of the support that you provide to these? And I'm particularly interested in the solar home systems and the kind of the pay-go companies where they're at and how you can help grow that market.
Yeah, now I think also reflecting on the question, but also what he was just saying, I mean, those are exactly the things that we're supporting. So the first risk, policy, regulatory risk, like you cannot engage in mini-grid investments in a country if the regulatory framework is not there. So if there's no clarity on concessions, tariffs, etc. Case of Mozambique, again, initially when the program started, that was not there, so it was very clear we had to give that priority before we could even think of supporting with finance on mini-grids. Now, and Isali, I think, will come back on it, that framework is now there. And that's a great achievement, I think, also for the government to have achieved that with parliamentary voting on that. We supported that as a program because it was critical. Now, before that, we could already start supporting also with finance and advisory, demand activation, another topic that he was mentioning. Like we're supporting on different systemic issues, say within that market. So that's demand activation, going out there in the communities with radio campaigns, television campaigns, on the ground work. Because the companies also say to us, look, this is not our job actually, or it's difficult for us actually to encourage productive use of agriculture with the mini grid or with solar home systems. If you can play a role there, if you can link us up with agriculture organizations, please do. Same on regulatory stuff. We cannot expect from individual companies to push that. So that's the kind of things we're supporting. Indeed, on the Market Development Fund, in the case of Mozambique, then we're running in many countries, but in the case of Mozambique, Market Development Fund, we work from the very small companies to also the NGs of this world. Just to be clear, there's a room to play for all companies. We just need more companies in this space. Now, if you talk with international companies that have access to the levels of capitals that Husk Power has, for example, they don't need much of our support to come up with investment facilitation support. I mean, Husk Power is very well positioned within the space to achieve that, and they're demonstrating it as well. But there's so many players that are not at that level yet. So from the very early stage companies, local companies as well, that don't have access to pre-finance, came also up in the previous session, we're supporting that with business development support, getting their business modeling right, getting their financial modeling right, and also with brokering of relations with investors. So that's a big piece. And then there's also some financial instruments. It's not just RBF. And just one comment on that. Results-based financing is a great instrument. We've been working with it since 2013, 14. Great, but it's just one piece in the puzzle because it comes after the investments have taken place. So it's great, but it's kind of a bonus. It does de-risk. It does incentivize companies to go to places they would otherwise not go. But where is the pre-finance coming from? It's clear with larger companies that have access to equity and debt. But where is it coming from for local companies that don't have that level of access to finance? So we're also working with catalytic grants. That's more smaller milestone-based payments along the way that allow companies to actually structure their business model, to pilot a new business model, to validate it basically, and to get to a level of investment readiness, but already with smaller payments. So it's catalytic grants matched with results-based financing, matched with advisory services and investment facilitation, and then the policy and regulatory work and demand activation. You need all of it together to eventually get the cross boundaries in and say, yes, we'll do this with bigger ticket sizes as well. There's a whole trajectory to get there.
So it takes a comprehensive market development program looking at the barriers and addressing them systematically. Yeah, cool. Isali, you've been lined up perfectly to talk about the policy and regulation and plans in Mozambique. Please share.
Okay, thank you. Maybe I will continue in the line that is already was mentioned. Of course, we have a lot of barriers to implement these projects on the off-grid. On the solar home system, of course, we have a lot of issues that we need to take in consideration. As the market is open for the private came with a lot of questions. How do they fit in the market? We are talking on the international companies, because when we are looking to Mozambique, we do not have national companies that are engaged on that. And these companies are very strong. It means that we do not have national companies. Was a challenge, and is still a challenge. Also on the mini grids and also on the solar home systems. It's when we are looking on the solar home systems, we do not have a pure national company. It's a company that has a support. They come together with the national companies. We do not have a pure national company. And also on the mini grids. On the mini grids is the main challenge, because the country has different characteristics. It means that the sites are different, and it's important to have a national company come together with these international companies just to fill all the procedures, what the requirements, even on the natural behaviors, because we want to set the mini grids, but we do not forget that we are talking on the communities, that they have their traditional behaviors, and it's important to take care on that, because I cannot go there and say, I want to set a mini grid without any baseline. So FUNAI is doing that baseline. Who are in that places? What is the ability and the capacity to pay? How do they are organized in on the sites? So a lot of things that they need to take in consideration. Looking to the companies, we do need to look in what is the financial capacity of these communities, of these companies, because we are talking on different stages. To set a mini grid, we need to start with a preparation process, and the regulatory framework bring that approaches. It means that we are talking on the concession to allow the private to be comfortable to set there. Because we are talking on the private investment, it means that if private want to go there, they need to have a pillow to his investments. It means that private would not invest without recovering. They need to recover their investments. And there are things across to these projects. The discussion on the tariffs. But the tariffs take us to other discussion. If the communities has capacity to pay for this tariff, So the regulatory framework bring that general approaches. On the concession, just to say, is one company that is allowed to be in this area. And in our also to combine the mini grids, we call the hybridization of electrification. It means that we are not only talking on the mini grids, we combine with solar home systems. And we are saying that solar home system is also an open market, and mini grids also open market. It means that this concessionary that will be allowed to explore this community is do these two combinations to implement. And there are a lot of things that we can stay here discussing on that, but to implement mini grids is challenging. It's challenging all of us as a partners, as a implementers, as a developers, as a government, as a financiers. So it's a long way to go. But of course, we need to define, and the regulatory framework comes to give a comfort to the private and say, private coming to this mini grids market, but let us hand by hand study together how can we reach to the universal access, because it's the main goal that we want to achieve. Thank you.
Yeah, thank you very much for sharing the landscape and sending these signals that the private sector is welcome in Mozambique. We're running last few minutes, so I'll take one question for the audience, so please have a think what it will be. But first, Manoj, it wouldn't be right to be up here talking about de-risking DRE without talking about the economic factors. I know high interest rates, currency slides. Can you very quickly run us through how this is hitting you and what you can do about it?
Currency risk is a real risk when you operate in Nigeria. And Nigeria currency depreciated by 40% in June and is actually depreciating again. That's a risk that a private company like ours, or for that matter, even if you are a billion-dollar company, you cannot take that kind of a risk. The thing that is needed for Nigeria market particularly and other similar markets, there's need for insurance product on currency devaluation. A 40% shock cannot be taken by any enterprise, whether it is Husk or $10 billion enterprise, right? So that's something that product doesn't exist in the market, and that product needs to be in the market, and that can come from loss and damage fund or climate adaptation fund. I don't know the mechanics, but that is absolutely needed. In our journey, we were negotiating all our terms, and we were at the signing round, and Naira depreciated. Imagine how freaked out our investors must have been, because your asset value just depreciated by half. So that's a real risk, and we need to mitigate it through multilateral institutions that can write insurance. It's not a huge insurance product, maybe a few $1 billion. So that's one. Interest rate is a risk that was actually made high because of developed economies. The SOFR, which is the base rate, is driven by the United States and Europe. They had the inflation go pretty high. The whole world is paying that price because the loan or the bond gets traded on SOFR. That's not a fault of Indian market. That's not a fault of Nigerian market. It had its inflation, whatever it has. It is not correlated with the Western market. The bonds and the loans get traded on the Western market benchmark. We need to have some kind of detachment from that so that you don't pay a price because the United States has an inflation rate of 7%. So that needs to change. That framework needs to change, and DFI should be at the forefront of changing that framework. I cannot name the lender that we have, but they did not use the SOFR to fund our loan of $20 million. So that's something that really needs to be talked about openly. And there are funds from Bezos Earth Fund and others that are giving 200, 300 basis points discounts. That needs to be a part of funding any loan that happens in emerging markets. Lastly, local currency financing is an absolute must. It is very hard to open up even in markets like India and Nigeria, but that is something that we need to sit together and figure out how to unlock local financing. That's the only way to last for the next 100 years for the assets that we are building. Thank you.
Thank you. Yeah, I think it's a strong call for action to improve climate finance to really bolster DRE projects around the world. I'm afraid we don't have time for questions. I'm told we're at time. If you can find one of the panelists afterwards and please ask them directly. So my apologies for hogging the mic. Yeah, so I think we've heard that the risks are high and indeed getting higher. We do have some of the de-risking instruments and strategies that are there, but they are not well capitalized. So we call on climate funds, MDBs, bilaterals, DFIs, to think about leverage and not lending. The DRE space can achieve universal access to energy. DRE can put the developing world on a low carbon pathway, and DRE can help people to adapt to the vagaries of climate change. But we need to de-risk DRE urgently. Thank you very much to the panelists. Thank you very much to SE for All, and let me pass back to Anita.
Almost cut your leg off there. Thank you so much for this very, very insightful conversation, and thank you so much for joining and listening in. We literally have the entire ecosystem, I guess, when it comes to decentralized renewable energy access. With that being said, we have delved deep into the critical discussion surrounding the de-risking of decentralized renewable energy projects, an imperative task as we collectively strive to catalyze investment at scale. The conversations held here at COP28 have been nothing short of inspiring, reflecting the urgency and commitment required to address the energy challenges that face our world today. Our shared vision of a sustainable and inclusive energy future hinges on our ability to navigate and overcome the challenges that hinder the growth of decentralized renewable projects. We have explored innovative approaches, collaborative models, and policy frameworks that can effectively de-risk investments, making them more attractive to a diverse range of stakeholders. In the realm of energy, we understand that decentralized solutions play a pivotal role in not only expanding access to clean and renewable energy, but also in fostering economic development, empowering local communities, and mitigating the impacts of climate change. The Universal Energy Facility remains steadfast in its commitment to supporting and accelerating such projects worldwide. As we leave this hall and continue our endeavors, let us carry with us the energy of collaboration, the wisdom shared by experts, and the determination to turn challenges into opportunities. The journey ahead is undoubtedly challenging, but it is also filled with immense potential for positive change. With that being said, I'd like to thank you all once again, and do enjoy the rest of the COP. I hope you're not already so tired, because I know we still have another 5 or so days left to go. All right, thank you so much.